Welcome to the Kendall Report. Well, it's the final day of the week and we have a long weekend ahead, so we get a little bit of relaxation. So the next video will be on Monday night, not Sunday night. This week has been fairly amazing, and it's also coming into the end of the month. So this is the final trading day of the month. And some folks were expecting some window dressing. We really haven't gotten that. In fact, there's a strong bid overnight, so we're continuing to see the market trying to get over this 4,200 level. I've been talking about this level for a number of weeks, actually. We managed just to eke out a close over 4,200 on the SPX today. As we look back on yesterday, the claims came out at 406,000, about 38,000 lower than expected. Continuing claims came in at 3.6. The other thing that we saw was the GDP come out. It came in at 6.4, in line with expectations. It was a revision, but the deflator was increased from 4.1 up to about 4.3. So that was a little hotter, but that number did trigger the 10-year to pop back above 160 to 161 on the close yesterday. The other report I discussed in last night's video was the home sales. That came in weaker as expected. A lot of folks were expecting an uptick. I thought this number would come in weaker, primarily to some of the constraints that are going on in the building area, but just home sales in general are down because there's virtually no inventory anywhere to be found. Before moving on to some other comments, well, let's go through and see the expectations for today. We have personal income, Chicago PMI, and consumer confidence. I don't think any of these numbers really matter. The big news out right now, there's a reasonable bid overnight. We're seeing the futures up about 12 handles on the S&P. What's out there is another budget proposal by the Biden administration. Now they've come up with a new number of $6 trillion. I don't know how many of you remember the $6 million man. Now we have the $6 trillion man. This is just becoming just crazy, the numbers that they're throwing out there. One of the things we do know is they can't raise taxes to that level to pay for this. So once again, we've got an MMT burst coming, whatever they get done. I talked about this last night. I think they're going to have a hard time getting any of these proposals done, but they're just floating these things out there just to see how the markets react to it. And there probably will be some stimulus. There will be an infrastructure deal of some sort, but it's not going to come anywhere close to these numbers that they're throwing around out there. But $6 trillion is a very big number. You folks also know that I had rebranded Janet Yellen from the fairy godmother to the Wicked Witch of the West. Well, she came out as the fairy godmother. She's getting a little schizophrenic. She's a little bit of a split personality. She can't decide whether she's the Wicked Witch of the West, talking about raising taxes and other elements that are likely to cause a drag on business. She's also talking about we need to spend more money, that we're spending money like it's 2010. And I can't argue the point that the GDP and all the numbers are much bigger, but she wants to spend that money. It looks like she's having fun, but she can't decide what her alter ego really is. And we'll have to continue to watch her closely. But she does actually appear to be having fun on her job. We look back on yesterday's activity from the market standpoint. S&P was up 0.1. We continued to struggle at that 4,200 level. Get above it, it backs off. It'll be interesting to see in the final trading day of May if we can print this up and close above the 4,200 level. We've not seen that yet, especially on a monthly basis. This would be an all-time new high on a monthly close. We also saw the NASDAQ down 0.1. The Russell outperformed again, up 1.1%. So we're continuing to see that movement to the upside. Now, a lot of this, I think, had to do with the enthusiasm around this so-called coming announcement about the $6 trillion budget. Market participants were looking at small caps thinking that they're likely to be a big beneficiary of those type of expenditures. In yesterday's action, we saw industrials up 1.4, financials up 1.2. We continue to see a rotation on a sector by sector basis, almost in a very random pattern. As I've been talking about in the past, I don't expect to see the Russell continue to take the lead. I thought there'd be another day or two in that trade. We may be at the end of that. If there is any window dressing, it might be a movement back toward those small caps just as we close out the month of May and we close out this quarter. We continue to get some decent traction in our database. We've moved up to about 56%. So we're still not materially over some numbers, but as we come into the end of the week, It looks like they're going to try to print this thing into an all-time new high, at least close on the high end of the month. So let's go ahead and take a look at the charts, see how the end of the week and the month are set up. Reviewing the WaveTech database. This is a Friday, so we will be running our intermediate models. I have very low expectations for anything material happening to the intermediate models. I do expect a slight positive rotation on the intermediates as we come into next week. Looking at the daily models, once again, we did see some positive rotation. There was 663 new buy signals, 243 sells, so a 6-to-2 ratio on the buy side. So that was positive, pushed the percent bullish up from 54 and change to 56. And that is likely to continue to climb. If we can close higher today, I expect to see this number move up closer to that 62% level, which will take us to the next level as far as the market getting more traction and accelerating this trend above 4,200. As I begin with the S&P futures, we are up 14 handles. We've actually traded as high as 42.17, which is above R2 for the night. The low has been 42.09. I don't think we'll trade down as low as 41.91, but the way the market's been acting over the last several days around this 4,200 number, we could see a retracement back to that level. But I do believe the extreme would be a S1 for today. R2 has already been exceeded. It's possible, due to this window dressing and the end of the month, that we could see a decent bid come in and actually print up to an R3, maybe even a RXT, which would put us at the all-time highs. As we look at the PPMs, we're still, in spite of the higher prices, the PPMs remain fairly flat. We're only up 0.10. If you recall, just 2 sessions ago, we were at a 0.30 PPM1. That's backed up substantially, and the volatility range continues to contract, which is somewhat dangerous. The only positive thing that's happening here is the cluster moving averages between the 10, 21, and 40 are very close together. 10 period moving average 41.68, 21, 41.64, and extreme 41.51. That would actually be RXT today, 68. So that takes us right to the 10 period moving average, which I expect will hold. Taking a look at the weekly chart, if you recall, I talked about the primary demand line in the S&P would be the 10 period moving average. That number is 41.3750. The low this week, 41.42. So we traded right down to that level, and then we bounced off of there. If we look at the market grid, for the week, S1 was 41.16. We didn't get close to that. We, in fact, basically opened unchanged on Monday and just continued to rally up. So you can see R2 is 42.27, and the high has been 42.17, which is the print overnight today. So we could see it move up toward 42.27, as in the daily chart. That would put us at an all-time high. As we look at the SPX traded in a reasonably narrow range yesterday, only 13 handles. We had a low of 41.97, a high of 42.13. We continued, as I've discussed, to struggle right around this 4,200. We did manage to get a close at 42.88. So that's the first close we've had for about 4 days above that level. We'll see if we can get any follow through. As we look at the market grid for today, there's an interesting pattern set up. 41.95 is S1. R2 is 42.11. We should, based on the action in the futures, open up around R2 if we hold this strength into the open. But R3, 42.17, RXT, 42.22. I think there's a possibility for us to test that level as long as we hold 41.95. So on the downside, 41.95 will be the pivot. As I review the NASDAQ, We continue to hover right along that 40-period moving average, 13,655. Low tonight, 13,842. As we look at the market grid for tonight, 13,716.50 is R2. We've actually printed 13,716, so we've already printed an R2, very similar to the S&P futures. S1's 13,641. We've not traded down to that level, but the expectation now would be for an S1, possibility of an R3 if we can get through this 16 number, 13,743, possibility of going up to RXT here as well. As you can see in looking at the market grid formation, it's contracted substantially, but we still remain in a trend level on PPM1, so that's positive, and that 40-period moving average has been rock solid support over the last several sessions. I do expect to see this thing move up at least to R3, possibility of RXT, but the primary expectation S1 to R3. Final market I'll discuss tonight is gold. Gold continues to trade in a sideways range. I've been talking about the resistance around this 1900 level. The 10-period moving average 1887 today is going to be major support. That's also S2 on the grid. And we look at the high overnight is 1901. My expectation is for an R1, 1903, a possibility of trading down to S2. The PPMs are fading a little bit, but they're all still in a very strong momentum. So the probabilities of getting under that 1887 level or S2 is only about 30%. This will complete the video for tonight. Thank you for watching. Have a great long weekend if you're here in the U.S., and we'll talk to you on Monday night. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.